Turkey's central bank has left interest rates unchanged for the seventh month. This comes after a similar decision made by the Fed last week, which eased concerns that the Turkish economy would be hurt by higher US borrowing costs. Looking at this data and more coming out of Turkey, I'm joined by Ozlem Derici, chief economist at Deniz Invest. So Ozlem, the interest rate is maintained at 7.5% as expected. Are there any hints in the statement about what direction the central banks will go in the coming months?
The rates were kept constant in the meeting, but in the statement we saw no major differences from previous release in August. In the previous meeting, the central bank stated that they will follow a tighter monetary policy and the core inflation is hurt by volatility in exchange rates. The same statement was kept. So, in the policy implementation, we will see no major changes going forward. The central bank manages liquidity in daily terms and keeps average funding costs at around 8.9%, close to 9%, whereas policy rate is 7.5%. So, it will continue to keep it at this level or above. It can go as high as 10.75%, which is the upper bound of interest rate corridor. They didn't change this as well. So we will probably see an average funding cost between 9% and 10.75% in the period ahead.
As I understand it, economists are meeting tomorrow at the central bank. Could you talk us through the discussion happening there?
Yes, central bank regularly meets with economists after the Monetary Policy Council meeting. And in the previous meeting, the central bank clearly stated that their policy will be pegged to Fed rate hikes. And as soon as Fed starts tightening, the central bank would tighten its monetary policy by raising its policy rate and the overnight borrowing rate. So we were expecting a rate hike from the central bank if Fed started its tightening. As it didn't do that, and as volatility in exchange rate continues in the market, we will be asking whether central bank still takes Fed as benchmark, or it will intervene in the market in an extreme volatility in the period ahead. Because if Fed starts tightening by December, it means that the central bank will not play with policy rates until its next Monetary Policy Council meeting, which will be held in December 22.
And last time we spoke, we were talking about how the markets were hurting from political uncertainty. In that time, how has the situation progressed and how are markets being affected?
Market volatility continues. The political uncertainty prevails in the market. The poll survey about the election is not showing a different picture than June elections. And after the June elections, we needed a coalition government, which cannot be formed. Then a new election was announced. But now, as we see no different picture from June elections, political uncertainty continues to weigh on markets. On top of that, of course, we're getting near to Fed rate hike. So we're having pressure from global markets as well. So these two combined puts a lot of pressure over lira. That's why we're hovering above 3 level, dollar TL rate, and as soon as it comes below it, some purchases are seen in the market and pushes dollar lira rate to above 3 again.
Last week, Fitch Ratings confirmed Turkey's investment-grade credit rating at BBB with a stable outlook. Fitch also identified Turkey among the emerging markets most exposed to a higher Federal Reserve rate. Is there concern that the stable outlook is at risk?
Yes, that's true. There is some concerns about revision in the outlook in the market. Actually, we were not expecting this to change in this review, but there were some market participants who expect a revision, downward revision outlook. Going forward, there is no new review of Fitch till the end of the year, but if things get worse or extreme volatility is seen in the market, especially after elections, we may see interim meeting or interim review from rating agencies, including Fitch, and there is a risk that outlook may be revised to negative from stable. That will probably be due to Fed rate hike and also political instability, of course. The agency Fitch stated that sound fiscal position protects Turkey's rating. That's why we do not expect an outright rating downgrade in current situation. But in an extreme scenario where election results does not provide a bright picture, does not clear the political uncertainty, there is a slight risk that we may see downgrades from rating agencies.
That was Ozlem Derici from Deniz Invest with me there, covering the latest market news coming out of Turkey. Now, for more insight and analysis like this, remember to keep tuning in to Dukascopy TV.